Hey, what is going on, guys? John here. I asked you guys for 100 likes on my Facebook post, and I would reveal my biggest secret when it comes to trading stocks, right? So, my equity curve back in 2014 was not that great. Like when I first started, my first few months, it was terrible. And then in 2015, that's when I ended up making an account with Robinhood. And from there, it's pretty much been steady uptrend, right? So now how am I able to do that? So with the stock market, right, to me, I like to try and play the longer term versus the foreign exchange market. So the foreign exchange market, is highly leveraged, right? And we can exploit those short-term movements over and over again, and we can do well. With Forex being highly leveraged and you holding on to a trade for a couple of weeks, those days where the price will spike against you, right, can be really significant in terms of percentage, right? So if you're somebody like me who doesn't like drawdown, then you end up being a more shorter term trader. But at least with stocks, the moves that I've been catching really don't get any drawdown. And so I'm going to explain pretty much how I'm able to do that. So before I actually get into the chart for a second, we're going to take a look at a few stocks actually. But what I want you to understand is that I don't use indicators. I don't look at fundamentals. Sometimes I do, but not in a way that's going to give me a direction. Meaning, like, I just want, like, I'll just be curious to say, okay, well, what's their market cap? And just to look at it, not to try and like pick a direction or something like that. So, but absolutely no indicators, no Bollinger Bands, EMAs, or MACDs or RSIs or anything like that. It is all price based. But now it also comes with the context behind the reasoning for that. So I'll go ahead and kind of get into it. So, excuse me. Now, the daily time frame, right? When you look at stocks, okay, we're actually going to go back a little bit here on Netflix. So when you understand that the earnings reports, right? Let me go ahead and throw those on here. Okay. So you see how a lot of the time when there's an earnings, there's usually a nice gap in the market. And it doesn't always happen. Like over here back in October of 17, there was an earnings, nothing really happened. But a lot of the times, if not all of the time, when you have wild earnings reports, they create these big gaps in the market. And then like here, for example, sometimes nothing at all, right? Let me just find a couple more. This one especially, okay, back in July of last year. Okay, so if you look, basically Netflix topped out in June of 2018 around $420 a share, LL, right? 420. So it fell off for quite a few months after that. Now, me personally, I've had a Netflix account since, oh my goodness, like 2012, 2013. Like it's been a long, long time. I've had an account for like 7, 8 years. It's been forever. I remember when it used to be like dirt cheap, and now it's like tripled in price since then or more. But it's all good. So when I look at a gap in the market, I always like to assume that they will fill. Now, are there such things as breakaway gaps where price will either run lower or run higher and never fill that gap? Yes, that does tend to happen. But I don't usually get caught up with that type of move like that. I just don't get caught up in that. I'm very selective, very strict when it comes to the stocks that I like to select, right? So for a second, let's go ahead and look at some of these gaps, right? So what happens when there's a nice earnings report, meaning that they beat expectations or whatever. I don't get into the whole like trying to predict all that balance sheet stuff and none of that, okay? So basically when a stock gaps, right? And the gap's higher, that's a good thing. That means, that stock longer term should be able to go higher. Now we do see that here. But what happens when price comes down into that gap? That's where I like buying my stock. Now, do I buy it in that gap every single time? No. Right? I miss a lot of trades. If you haven't seen my list, actually, I've got quite a few. Okay, my stocks list is quite extensive. I also watch the Dow Jones, and all 30 are in here, plus the Dow Jones ETF. And then I've also got the NASDAQ. I've got not all of them, but I've got quite a few in the NASDAQ as well. So my list is very extensive. I do miss a lot of trades. But the ones that I do catch, especially this year, have been absolutely spectacular. I've only taken one small loss this year, and that was on a short, on Neo or Nio, whatever it is. But anyway, so I like to play those gaps, but sometimes what I'll do is I'll wait for the bottom to be set, meaning I'll wait for it to trade into that gap and then trade higher. So once I see something like this, right? Oh, I didn't mean to do that. I'm gonna just leave it over there. When you notice that it dips into the gap, right, and then trades higher, this to me with a long wick to the downside, that's really good. It's showing me that prices rejected that area very nicely, which means it's ready to be bullish. So I'll go into the smaller time frames and look to buy those short-term dips. Now, how can we see that on the daily time frame? Well, you can. It's really easy. You notice how these days open and there's a wick on the downside? Open, wick, open, wick, open, wick, close. There's wicks on almost every daily time frame to the downside during an uptrend. So on smaller time frames, you can go in there and look for buying opportunities. But you have to remember that this comes after you feel that the bottom has been set, right? I don't try and catch the bottom. Sometimes I do. I don't try and catch the bottom though most of the time. I'll wait for the bottom to be set and then get in on a retracement. That is what helps eliminate almost any drawdown at all. Right? So anyway, let's continue forward because now that you've got the context a little bit, kind of how it is that I do it, now I'm going to show you how I caught the very explosive move on Netflix, which was also talked about many months ago on this channel. So if you haven't seen that, you need to go back and watch that. Okay. So now sometimes do you get an earnings report like this where price will push up a little bit higher, but maybe it's been on an uptrend? Okay, well, during that uptrend, was there any gaps? Yes, there was. There was a gap right in here. So what does price do? It comes down, it fills that in, it does trade a little bit through that, no big deal. But what does it do? At the end of the day, it rejects, right? With a nice wick on the downside, it's rejecting. That's a bullish sign in a bullish market, right? So in bullish markets, we like to buy, right, on retracements. So all of these days in here could have potentially been buying opportunities. Now, would I hold on to a trade that I took and then it went sideways for 5 days? Probably not. I probably would have, broke even after the third or fourth day. I would have said, all right, maybe this is not good to go, and I would have got rid of it. Now, would I have missed this whole big move? Yeah, it happens. But I also don't trade one stock at a time. All right, so and I'm not going to get into too much of all of this. You can go back into your own charts and see, if stocks actually, dip into their fulfillment, I guess you could say. But be careful, though, when looking at gaps, because the gap is actually not from this wick to that wick. It's actually from this wick to the close of that that last up candle. That is technically the gap fill. All right. And we'll get into that on when we get over to eBay, actually. So, but anyway, so let's go to the recent trade that I took on Netflix, actually. Okay. So this is what's important, right? Let me delete all this stuff. So this very big gap down, that is huge, right? So from the close of that candle to the opening, right, that is a drop of like 10% on Netflix, which is crazy, right? So I didn't buy it, right? I waited for the low to be set. But now, how did I know the low was going to be set in September? Well, we need to do a little bit of research. So we need to look back just a little bit, right? And when you notice this price action here, right in December of 2018, well, what do you notice? Price was super explosive, right? There was a bottom set like roughly around Christmas time. And then right heading into January, it exploded in price, right? But now, again, with that being said, what did that come off of, though? Well, if we look at the bottom, what's directly over to the left of that? There was a gap that was being filled right there, right at about 230, 231. Now, did I buy that? No. We're talking about this trade that I took a couple months ago. So that gap essentially partially filled for the most part and then rallied higher. So price came back into this area, right? And still, I have not bought it yet. I'm waiting for that low to be set. Now, this is what's the important part. Now, how do I know that that low has been set, on September 27th, 28th, 29th, a little bit into October? I don't know that that low has been set because I need price action to let me know that the low has been established. So we don't get that until this earnings report on October 16th, right? Which I believe was after hours because on the 17th, it opened much higher, right? So the last recent high was broken. Okay. So what does a higher high indicate, right? An uptrend, right? So price comes back lower. That's where I was buying it. I actually bought it at 272. So I did take very little drawdown, right? And there was another video on that as well, and especially on how I could have did a little bit better job. But I mean, very few percent of drawdown, big deal, right? I can't tell what that was. Maybe 2-3% of drawdown. That's not something I'm going to cry over. Okay. So now buying it down here, and I had a mental stop of right below this low, right at 262. So about $10 per share, which is not bad for a $270 stock. So I bought it there, and really I was just patient. So it did trade sideways for 3 to 4 days. Not a big deal. So once it started to climb higher, right, I was ready to go. I said, okay, now I'm just going to be patient and I'm going to wait. And of course, I waited. Now, my original target did happen to be this gap fill, which was the close of that candle. So that was actually about 262. Or sorry, 362, my bad. From 272 to 362. So almost $100 per share, which is great. So now I did end up getting rid of it sometime during this run higher. I don't remember exactly where I sold it, but it was somewhere after a few days of nice gains. So I didn't catch the entire move. I caught, I guess, around 24%, something like that. So not bad at all. But I should have held it like my original plan was supposed to be, but it's all good, right? I am not going to complain about not catching the bottom, not getting out at the top. I'm focusing on what I'm doing right and the gains that I get, and that's it. So again, I'll just run through this one more time. History shows us that we were bullish from the 250 area roughly. And then when the low was established, and we got that because it made a higher high here, we bought, or I bought the retracement from that, and then went from there. So yes, very like low to no drawdown, straight profit. Okay, so going to what did we say? We said Twitter, right? No, we said eBay. Well, we're gonna do Twitter as well, but I meant to do eBay. So, all right, with this stock, basically doing the exact same thing as Netflix, right? It dropped off from the close of that last up candle, and it opened, much lower on some type of earnings report back in October. So you can see that the estimate was 0.64. They ended up earning 0.37, which was a surprise of, I guess, ridiculousness. So the stock went way down. Now, what I noticed was I did not look at this back in October. I looked at this in December near the end of the year, right? When we had a lot of downtime, holidays and stuff like that. So there was plenty of time to look for stocks. So what I noticed is that pretty much it was trading sideways, right? Now when trading foreign exchange, I do like trading sideways markets because there's a lot of manipulation that occurs during that time, and stocks are pretty much no different. So I won't really point out the very obvious to me to you, but what I will tell you is that, the target, just like I said on Netflix, the gap fill is not at the wick. That is not the gap fill. The gap fill is at the close of the last up candle. Okay. So with that being said, here that's roughly 39.20. Okay. And you can see the beautiful reaction. It went to like 39.25. Okay. So 5 cents per share off, higher. And then before it, really fell off. So this move from January 31st into February 4th, right? I caught that. Now, did I catch it at the very bottom? No. I actually bought it a little bit in the middle towards the consolidation. But what I didn't buy shares, I actually bought an options contract or a few options contracts. I don't remember whether it was one or a few. But they were longer term options, right? They were actually January of 2021. So I wanted to give this stock plenty of time to get to the gap fill, right? So I was not expecting the stock on February 4th to open, drop 2%, rally 11%, and then close at a positive 6%. That is a wild day for eBay. And you can look at that too, right? Look at all of the, daily bars, right? Let's look at a bar chart. A lot of these bars, right, are small, and then you get this very large bar. I am nowhere near accurate when trying to predict days like this because, stuff like this to me is not predictable. I think it was a potential buyout. I think somebody wanted to buy eBay, and I could be wrong. I'm not sure. Now, would I expect a run up higher after a move lower? Yes. Okay. That has to deal a lot with manipulation, essentially. So I won't get too much into that, but yes, I just held on to it. Again, just a little bit of drawdown, not that big of a deal with that long-term option. It obviously lost a little bit of value during that time, but not a lot. Okay. I was still able to sleep at night and stuff like that. So I was home, obviously, right? I was home during this run higher. So once it closed that gap, I went ahead and closed my long contract. So on the day, it was when I took the screenshot, it was at 102% for the day. But I actually closed it at a higher price. So, I made well over 120, 130, 150%, something like that, for the day on that contract. So it was great. But again, it's basically the gap down, waiting for the low to be set. I did take a little drawdown, but ultimately in and out. Okay. So with Twitter, I did the exact same thing. Now a little bit slower, much slower than eBay. It actually went from earnings report to earnings report. So that should also give you kind of a clue on the timing of some of these stocks. Okay. Back in October 25th, they had an earnings report, an estimate of 0.20, an earnings of 0.05, which is awful, okay, apparently. So it's terrible. And so the stock dropped. Now, it did run a little bit lower, and it ran to like the 29 area and then started to trade sideways. So what I did, and I did take a little bit of drawdown on this one, but not a lot. When the gap fill started, it started to trade into it, and the daily candles were closing above that level. That's how I figured this stock was ready to go higher. So I waited a couple days for it to trade lower, and I went ahead and picked it up. Okay, so when I picked, I don't remember which day it was, to be honest with you. I really don't. Now, did I sit through a little bit of, wishy-washy movement, right? Did it move sideways for a little while? Yeah, it did. But their earnings on February 6th was also bad, apparently. But it was estimated 0.29, earnings of 0.5. It was a horrible surprise. Yet, the stock went higher, right? That's what confuses a lot of people about these earnings report or about interest rates or unemployment, stuff like that. Like say for dollar index, for example, unemployment will hit and say it will be good, right? But the dollar yet will spike lower. And so people don't understand that, right? Oh, well, if news is good, why is this going down? I mean, you're looking at it right now. The news was bad. The earnings report was bad, but yet the stock went higher. Why is that? Why did it hit my target perfectly and then trade lower? I'll let you decide. Okay? I will let you decide on why that happens. But yes, so bought it, very little to no drawdown, instant profit on that earnings report. So when people ask, how do you trade earnings reports? Well, if it's a sideways market or something similar, I probably won't. But when you have big gaps like this and they're getting close to being filled, there's a good opportunity that the earnings report will dig into the gap and then fill in its other gap before it trades higher to fill the actual other gap. Guys, you got to do some studying, okay? You can't just watch my YouTube and expect to be, some superstar. I don't even claim to be a superstar. My equity curve is very nice, but that doesn't mean that, I'm a guru or anything like that. I'm just showing you the way that I'm doing stuff, okay? So yeah, go back into your charts and study these gaps, okay? They're all over the place, right? Especially this one, right? Up candle, gap closed, price runs higher, right? And also, let me go back to Netflix for a second. So looking at Netflix, right? What you got to realize, and again, I told you I wasn't going to get into fundamentals, but when you understand the state of the current economy, right? So today is February 15th. Yesterday was Valentine's Day. February 15th, 2020, right? Unemployment is very low, right? And I'm not saying, that I'm Republican or Democrat or independent, nothing like that. I actually don't vote. Judge me if you want to. But when you understand that unemployment's very low, that means people have jobs, right? So when people have jobs and they're making extra money, well, how do they spend that? Number one, people who have normal jobs, like a skilled job, right? Skilled labor. When you work for a nice company, you have the option to contribute to a 401k plan, right? And I'm not a tax advisor. I'm not a investment advisor or anything like that. I'm just saying, I had that option when I was working for Office Depot a couple years ago, right? I had that option to contribute to a 401k plan, and I can pick where that goes into, which is typically the stock market, right? So if you have very low unemployment, that means people have jobs and people, there's a big, large number of money being pumped into the markets, right? Which has helped propping up stocks. And when people have enough money to buy entertainment, what are they doing? Well, they're taking their kids to Disney World or Six Flags or whatever, whatever. But what do people do at the house, right? They're Netflix and chilling, or they're watching Hulu, whatever. I don't look at Hulu stock, but I do look at Netflix, right? So if, people can afford going to Disney or whatever, then they can definitely afford Netflix. I think it's what, $15 a month, or there's a couple different plans. Anyway, the point is that the large majority of Americans can afford Netflix. So you buy the stock when it's lower for the long run to go higher. Make sense? Another thing too is that you got to realize is that just because people are contributing to their 401ks, that doesn't necessarily mean the stock is going to go higher, but it does allow money managers, banks, to have more money, right? Because people are putting that money in. So you got to think about who's actually buying these stocks as well. It's not just me and everyone else, right? It's the hedge funds, large banks, institutions, whatever you want to call it. So if they're getting more money, they have more money to influence the market, right? So there you go. Yes, that is pretty much it. I think we did Netflix, Twitter, eBay. Oh, I didn't do Uber. So Uber, I'll give you a small update. I don't want to make this video too long. Uber, I did buy twice. I bought the low twice. I know that sounds weird. I bought the low that was established here, and then when it had a bad earnings report and started to trade sideways, that's a clue. Bad earnings report starts to trade sideways below 30, I bought it again. And then it's been obviously having a stellar performance. So my average was between the two, around I think 27.70 or 27.60, something like that. It's well under 30. Okay, so I think it topped out at a 50% gain within a couple months. Okay, absolute phenomenal, right? No drawdown, pretty much all profit. Same thing with Lyft as well, except Lyft has not been doing that great. I bought Lyft under 40, just like I bought Uber under 30. So I'm definitely in good hands here. However, their earnings earlier this month, a few days ago actually, it has been tanking since. So it is what it is. I did sell one or two shares prior to this just to try and take some off the table. I kind of assumed that this would happen, and all I really did was, and that's what this Fibonacci is from a weekly basis. And so when it hit that 50 level, I kind of did expect some level of pullback. So here we are. We are definitely getting some pullback. So it is what it is. But I don't think I've only taken one small loss this year. That's it. So definitely up. Definitely outperforming the S&P as of right now. So we're good to go. I think the S&P as of today, let's see, from January 2nd, it actually opened higher. So I'll measure from the close of December 1st to where we are right now, which is 4.9%. So yes, I'm definitely outperforming the S&P as of right now. So that's pretty much my secret, guys, is understanding like what goes on behind the charts, right? Who is actually buying stock, and the overall trend for most of these stocks is higher. Okay, so just because a nice stock has a deep pullback, that doesn't mean that it's a bad stock. It just means that you're getting a percentage off, right? So that's how I did Uber. right? Where, you know, instead of buying it at the IPO or above IPO, I waited, right, for it to, I think it opened here. And then so it traded, it was down 38%. So most people will look at this and go, it's down 38%. I don't want to buy it. But I looked at it, I believe how a hedge fund will look at it and say, hey, we can buy this stock for 38% less than what it hit the market for. Right? And so obviously with that, this was the bottom and it's been rallying. So just a little shift in perspective for you. So yes, that is going to be it. Guys, thank you so much for watching. Please follow my Instagram at Jon Fibonacci and also the at Trade House Houston. All right, I would appreciate that. And subscribe for more videos, and I will see you in the next one.